Good morning. This is Larry McMillan with a stock market update on Monday, June 26th. So the month of June has been a pretty strong one for the S&P 500. We broke out over 4,200 and then even more strongly broke out over 4,300. The market has run pretty quickly after that and it's gotten itself a little bit overbought. But those breakouts make the S&P chart bullish, and so we are carrying a core bullish position because of that. Both those levels, 4,200 and 4,300, should represent support. If in the unlikely event, in my opinion, if we fell below 4,200, that would be negative. Equity-only put-call ratios remain on buy signals, although they are in very overbought territory. The weighted ratio just made another new relative low on Friday. The standard ratio is kind of wiggling around at low levels. But until they actually roll over and begin to trend higher, they will remain on buy signals. Now, I mentioned that the run in S&P had created some overbought conditions. One is the fact that it's risen above its +4 standard deviation modified Bollinger Band, which has resulted during last week's pullback resulted in a new McMillan volatility band sell signal. So you have that one sell signal in place right now. Breadth has been really quite negative, even coming into last week. Then last week was extremely negative in the breadth category. So both breadth oscillators are in sell signals. The stocks only oscillators in oversold territory already. We're not paying a lot of attention to the breadth oscillator signals at this time. They've just been subject to too many whipsaws, and our other indicators have been doing quite well. So we're just sort of standing aside on breadth for the moment. New highs versus new lows. On the New York Stock Exchange, new highs continue to outnumber new lows, although that outnumbering has diminished recently, but it's still positive, so that indicator remains on a buy signal. VIX also remains bullish. The trend of VIX is still downwards. VIX has fallen below 13. Last week, anyways, it did. And that's the lowest it's been since January of 2020. Of course, we know some bad things happened after that, but we don't really have to worry about VIX until it starts to rise. So if it's still trending lower, then that's okay for stocks. Meanwhile, if it rises by 3 points or more, then we'd have to take a look at some potential sell signals setting up. The construct of volatility derivatives, which basically means the term structure of the VIX futures and of the CBOE volatility indices, that remains positive for stocks as well. So overall, we are maintaining that core position. We have taken a small negative position around that based on the MVB sell signal, and we will continue to trade other individual indicators around that core position if and when they give confirmed signals. Meanwhile, I invite you to visit our website and take a look at the other newsletters that we have to offer that keep track of these things on a daily basis. Meanwhile, have a great week trading.